Today in this video, I'm going to be talking about what's going on with the Las Vegas housing market. And I have a special guest here, and it is Randy Char, President, Corporate Broker of Las Vegas, Sotheby's International Realty. So Randy, thanks for being here. There's some questions that my audience has for us to kind of answer of what's going on in the Las Vegas market. So the first one is, what are the key factors driving the Las Vegas real estate market today?
Well, first of all, thanks for having me, Dallas. This is fun for me because I have known you for a couple years and you came to our firm and you've just lit it up and you've done such a wonderful job building your own business, using the phenomenal brand that we have, and obviously expanding your audience from the content that you're delivering. It's always highly professional and it's valuable, and we really appreciate that.
Yeah.
So thank you.
Thank you, thank you.
In terms of what's going on in the market and one of the key factors driving today's market, well, so much has happened. You know, our city has evolved. You know, I moved here in 1995, and when I moved here in 1995, I didn't know what was going to happen. I just knew something was going to happen in the city.
Yeah.
And I'm like, I want to be part of this. And you know, slowly we've evolved from a predominantly gaming industry to kind of entertainment. Now with professional sports, that's really put us on the map. People that would consider us as, oh, that's a fun place to be, are now saying, wow, you have a legitimate city. You have a football team, you have a hockey team, among others that are coming. Definitely just the growth of the city and the attention, the amount of eyeballs. I mean, what was it, a record Super Bowl in terms of viewership and record Super Bowl in terms of
everything,
ticket prices.
Yeah.
Coming off of that, it just seemed like everybody was in the city. And so that's how it starts. We find that a lot of people don't come to Vegas because they think, oh, you have the best hospital in town and we want to move to this neighborhood or this suburb. They come here because they're entertained and they say, wow, the weather's actually pretty good, or the golf here was really awesome, or boy, these restaurants are just smoking.
Yeah.
Because I think we have some of the best restaurant line.
Yep.
And then it starts from there. There's so many strengths of our housing market and other things.
Yeah, and a lot of conversations I have as well, it's like they didn't even realize how big our city is. They think everything surrounds on the strip, and that's what everyone does only. And just growing up in LA, would have never have thought that I would be living in this city. So Randy, you just came back from a GLVAR meeting with the numbers. Tell us about that.
It was a very interesting meeting. What it shared with, and they had someone speaking on kind of the new home growth versus the resale. In Las Vegas, we've always had a robust home building kind of background, as well as resales that go back and forth in the market. And the proportions shift typically back and forth. But what we're seeing right now is that builders are extremely bullish on Las Vegas. In fact, they're putting their money where their mouth is. In December, they pulled some of the most record-setting permits. And that is the indicator of future growth, is when you pull a lot of permits.
Yep,
so last year we had about, give or take, 40,000 plus sales in the marketplace. Of those sales, 11 million approximately were new homes, but in terms of volume, the new home builders have accounted for closing in on 40%, especially when you sprinkle in some of the data from custom home builders that are building in this marketplace that are not always as far as visible on the MLS and therefore don't always count in the numbers. The other thing that's incredible that I heard is 24% of the product that was built out there on the new home arena are townhomes. Why? It's because we're trying to serve a more affordable price point as well, because prices have obviously grown for good reason, because of the fundamental improved lifestyle that we provide and all the people moving in town for tax advantages, et cetera. So it's neat to see that kind of market evolve, where we're trying to fulfill the needs of the future market, because there's no question about it. Contrary to what people believe, we're out in a desert. There is not a ton of land. Most of the land that is remaining is controlled by BLM, which stands for Bureau of Land Management, and they just simply have not leased a lot more land. So I think we're going to see more of this in the future, where there's going to be continued demand and people coming in, and frankly not enough land and homes to build in fast enough.
Are there any emerging neighborhoods or areas in the Las Vegas area that are becoming particularly popular amongst buyers?
Well, definitely. There's actually a lot of pockets around Las Vegas. You have the master plan community of Summerlin, as an example, on the west side. 22,500 acres, home to eventually 60,000 families. It's starting to actually near completion. I never thought, I moved here again in the mid-90s.
Almost done.
And it was like just starting out. And they were the #1 master plan selling community in the United States for many, many, many years.
Yeah.
And now finally we're seeing some of the final product. And among them, which is pretty interesting, these home builders that are building semi-custom-ish homes, meaning the price points are not modest. They're, we're talking 2, 3, 4 million in case of a community called Ascension. And there seems to be a really deep demand for us.
Oh.
So deep, believe it or not, Toll Brothers, who has 275 home sites that they'll build on and barely started.
You might not even get a house there.
They've actually literally closed the list right now
Yeah.
because there's so many people pre-qualified are in line. Now,
Too much demand.
what happens in the future, as many of those folks will probably pick something else, but just to show the spirit of the demand and how deep the market is in the above $2 million market in Summerlin, and why probably the highest golf courses and parks
Yep.
and trails and restaurants that are off the strip. So when you talk about if there's a life off the strip, well, there's practically another city that is self-contained that is in that area. And that's one of the popular reasons why it's so popular. And then just taking it up from there, there's other communities that have been merging. And in fact, one of them that's announced called Maya, which is a really interesting company. It's 171 home sites on 170 acres. So that's about an average of an acre lot, pretty good size. Prices are projected to be between 2.5 and 7 million on the opening phase of what they have, sold by Howard Hughes. So what does this tell us for the future? It tells us that this demand is deep, not just because they want a big house on it, but the quality of life that can be provided in Summerlin. Lastly, in Summerlin, what I think is pretty neat in the custom neighborhoods is you're finding these kind of original communities that were built 30 years ago emerging, and kind of they're tearing down the old house and they're building the new house, or they're doing major renovations. And they're located in these guard-gated neighborhoods next to phenomenal schools, but they don't feel like Vegas, or at least what you would think like Vegas, because there's canopy trees over the street and there's
actually greener.
Right?
Greener out there.
And these neighborhoods are sought after. Like as soon as a house comes up on the market, there's tons and tons of eyeballs on it. So it's pretty exciting to see the different niches in kind of the upscale to ultra uber luxury. And of course there's the Summit. Starting price of all in home is around 20 million plus. So I mean, we pretty much have everything on that side. So that's kind of a little of the pocket that I see. It's interesting.
For the Summerlin area. And then as I work my way down, right, from the Henderson side, you got Askaya and McDonald Highlands, which is 5 million to 20 million, 35 million actually. You got one on the market right now. These builders, these custom builders, they started their Nexus program, right? And it's like custom, it's a custom builder, but they're kind of giving you the floor plan and then you put your own taste inside of it and stuff like that.
Yeah, I find that's really interesting, design build type of homes where you can pick the concept of the home that you like, but there's definitely more flexibility in what you do. But what it does, the true benefit for the customers, and the reason why they love it so much, is building a custom home from buying a raw piece of dirt and then building it. Not everybody has a stomach for that. And so you really need to know what you're getting into when you're talking about custom homes. I think that's maybe a whole session by itself. Should you build a custom home or not? But in this case, you can save a lot of time, headache, and energy because they've already mapped the lots out. They already have the structure of their plans and permitted. And today, that saves you, could potentially be a year or two.
Yeah, about 2 years.
Yeah, and then Christopher Homes is over there, another builder as well.
Homes.
They've been very successful in building kind of even duplex product to
villa style.
Villa style with great views. Actually, it's called View, VU. For their views, I guess. And these are like a lot of executive style homes where they live single story, but they may have a pop top with like a lifestyle deck that you can see around the city and the mountains, but lives very conveniently.
And amenities, that kind of stuff, they have same amount. You have the district, so you got restaurants out there, you're close to the airport. I'd say about 20 minutes to the strip.
Right.
Yeah. Inspirada also, if that's a more family-like, more affordable, right? Anywhere from 400,000 to 1.5. And this is a great area. It doesn't have that Las Vegas feel.
Yeah, I've had some customers that have moved in Inspirada recently, and some of the things that they say that they love the most is for that value that you're talking about. You're getting a new master plan community that's hillside, and it's very convenient to the strip. In fact, it's probably one of the closest communities along with Southern Highlands that's next to the 15. So if you're coming in from California, or you want to go to the airport or the strip, it's a straight shot.
And I spoke with Toll Brothers. Toll Brothers also mentioned that they're seeing like the price points from Henderson and Summerlin, the difference in price points is getting tighter. How does the rental market in Las Vegas compare to the sales market in terms of investment opportunities?
Interesting question. You have to kind of dissect that in my mind into a few different categories. Number one, are you buying for cash flow? Are you buying for appreciation?
That's the question.
Those are the questions. And I think it's important when you talk to an investment, like and say, what's the best investment in Vegas? I hear this all the time. I think it depends on what's important to them. But let's talk about a few things here, and let's unpack a few things that are definitely commonalities of why Vegas can be highly considered as a good investment for the future. Relative to some areas, let's say California as an example. California, when you own a home as a rental home, typically you have a combination of higher taxes associated, higher association fees, and frankly, a lot stricter rules that are tenant friendly there and landlord unfriendly.
Correct.
Right?
Yep.
And so in Vegas, number one, I think they're a lot more fair. Like, if someone is not paying, you don't have to worry about someone destroying your property over 6 months while they're not paying until the courts can kick them out. You can take action relatively quickly if they're truly not doing it. That's correct. Number two, I don't think a lot of people realize we have tax laws here that you can only increase the taxes a certain amount per year, regardless of how much the appreciation is and regardless of how many times that home is turned over. So there are neighborhoods, if you buy a little bit older, the taxes simply haven't caught up with the appreciation of the home. So relative to sale, the target used to be, use 1% as a tax rate. So if you buy $1 million home, maybe $10,000. I'm seeing some quality neighborhoods that the tax rates are literally about 0.5% of current value, something like that, which is incredibly low. Combine that with the homes are newer, so that means less maintenance, right? That really gives you a stronger window to succeed. Now, the pocket that I find is kind of interesting that I might want to talk about briefly is that counterintuitively, a lot of times you think, okay, I buy the cheapest home, I'll get the best cash flow, but the lowest maybe appreciation because it's commoditized. What we're seeing in this marketplace, which is interesting, is kind of a dynamic where some of the more luxury homes are actually bringing a relatively higher rental rate and a much better quality customer with potentially a higher runway for appreciation.
Correct. I kind of got into that with one of my rentals too, and I was blown away.
Blown away. But let's just start maybe with the long-term kind of unfurnished 1-year leases. For example, I'm seeing places like in West Summerlin. Personally, I own a place called Mesa Ridge. I have a 5,000 square foot brand new home that will yield somewhere between 12.5 and 16,000 a month for a place that's literally $2 million. That's a strong ratio because you can make an argument in the city that a $500,000 house might rent for $2,000, $2,500. That's a much stronger return. And remember, some costs are fixed. Like if you have an HOA master plan fix, you pay $50 a month for that, whether you have a $500,000 house or a $15 million house.
The quality of the home matters too, because I have one in Esperada, $875,000, and we're renting that out for $3,900. Unfurnished. And then I got another one, 2,800 square foot, renting furnished for $5,000 a month.
I think that's so interesting. We've seen through F1 and Super Bowl and other events.
Super Bowl, they didn't have enough rentals.
I can't tell you how many NDAs I had to listen to and manage and those type of things because people would rent them for the price of a month or even more. They would get their return in 1 week. And we're talking rents of $20,000, $50,000, even in our office, $100,000 for the Super Bowl we were able to achieve with some. And I think that's gonna be more of the norm actually. It's not just Super Bowl, but we have constant turn of events that are coming here.
Correct.
And so that's a very interesting market to look at. So from an investor standpoint, they can really sink their teeth into a lot of different things, and they can also value add, meaning they can buy a property that might need a little bit of work. And so the sweat equity they put in the home, they're gonna win there. And then they're gonna win because their cost base is lower, they're gonna win on a cap rate basis, and then they're gonna win because they are potentially modifying the use of it so that they can really maximize the return. And I don't see many other cities that you can do this right now that has so much future potential upside.
All right, Randy, we can go on and on forever, but if you guys have any more questions, comment below. Thank you for watching, and Randy, thanks for being on the show.
It's been an absolute pleasure. Thank you, Dallas.